All right, good morning, everybody. So we're finally getting the event, the thing we've been waiting for. It's FOMC day. And it's interesting how little this seems to be understood by most new traders. I'm in an area where we get asked all the time, give the traders the opportunity to ask questions, and it's nonstop. Hey, will you analyze Tesla, AMD, NIO, as if any of that analysis is going to do any good in an FOMC week when the announcement is going to throw all the technical analysis out the window and that everything comes down to what the FOMC says. That's it. That no other amount of technical analysis is going to be applied. If the FOMC says something that the market doesn't like, maybe it's caught off balance or hits them with surprise numbers that they didn't price in, the moves are likely to be big. Otherwise, the moves are likely to be temporary. We'll get a lot of violence first, and then they'll settle down and we'll come back into nothing. Think about what that looks like for a moment. These white lines are FOMC meetings. And as you can imagine, whatever they come out with, that is going to be what directly affects the market. Apple, Amazon, SPY, Tesla, whatever the FANGs do, the market is going to do. The data we're waiting on today isn't just for today. I think the market's got that 75 points already priced in. And unless they hit us with a surprise, say 100 points or, really shock and all, say 125, something like that, which is really, nobody's suggesting anything of the sort. But suppose they did hit us with a surprise, then the market would try to price that in as well. That would be a downward move in the market. We would retag the lows that we've already gotten, probably drop lower than that. And if they shocked us the other way, if they came out with only a 25 point or a 50 point, it would likely send us popping to the upside because the market had already priced in 75. So if we only get 50 or 25, then we would make that big move up. So when I continue to see traders asking, hey, will you analyze Tesla? Will you analyze AMD? What do you think NVIDIA is going to do? It doesn't matter what you think it's going to do. It doesn't matter what the technical analysis says. It only matters that we have to wait for FOMC and then trade based on the information that we get. Now, yesterday was a continuation of don't rock the boat. So when we got down to 39.22-ish, the expectation was that we would stop falling there because we were near the bottom of the range, and then we could hold the line and maybe even move back up. And of course, we didn't stop on a dime right at 39.22, but we did hold those lows, and then we did come back off of them It wasn't much of a surprise when you think about what we needed. Let's do it the other way. I know it's a little uncomfortable to zoom in that much, but it's really all we need. We had that TRB, nice downside break. We hit that range low, 39.22 and a tick. Worked our way right back inside of it. It's not much of a surprise, right? Don't rock the boat. Keep the range. Now, we could have broke out of this. We never want to say that price can't do something. So we could have broke out of this and really just fell yesterday. But it would have taken a massive catalyst event. And obviously we didn't get one. But without that, then the dominant expectation was that when we got down to that 39.22 yesterday, we wanted to start looking for reversals and play the trade back up. So what do we have for today? It is very likely that we're going to get a very sideways market. Now, yes, we had, a lot of the FANGs report, and there's some exuberance, but nobody's really going to want to commit large sums of capital until we get this FOMC announcement. So we're really expecting a range bound day, a whole lot of nothing, maybe some running around like a hamster on a wheel, a lot of running around until we get that announcement, right? And these bars down here at the bottom, this is the cumulative overnight volume. It really stands out at the lack of volume right now. Kind of put it into a little bit of perspective. So for today, our expectations are a continuation of don't rock the boat, expecting to hold the line until FOMC. 3 things that we can do today. The 3 things that we can do every day. Stay inside the range, have an inside day breakout to the upside or an inside day breakout to the downside. On the docket today, 8:30, 10 o'clock, 11:30, 2 o'clock, and then the conference at 2:30. That status report at 10:30 normally isn't that bad. I would be careful today. So we had an inside day breakout earlier this morning. Couldn't keep it. Faded back down inside. There was a little bit of news in the overnight hours that had a bit to do with this. Scrolling back now, I don't really see it now, but it doesn't matter. So we failed inside day breakout, holding underneath the VWAP at the moment. We have an untouched daily pivot point, so MDP. And we're in a pretty tight wedge between the cash open of yesterday and the high of yesterday. It's a pretty tight range. With the lack of volume, not much of a surprise. For that topside breakout, ADR half is 39.77. And a full ADR breakout would be 40.15, which gets us up into an institutional pivot point from Friday. Now, to be able to make that move, we have an institutional pivot from Sunday night, Monday morning. And for our inside day breakout, we need to get above 39.64.5. So base case is that we maintain the range until the meeting. And then we get a topside breakout, whether it only lasts a day or we get a nice follow through like we had back in March, right? March 16 FOMC. The third scenario would be that we break to the downside. ADR half is basically at 3,900. There is a cog line at 39.31 and at 39.11. And then the full ADR is 38.63. So we're looking at a volume profile here. We are at the point of control, and it's the point of control for the TPO and the volume profile. The institutional pivot point 40.16, it lines up with the previous week's high. So far, we're holding above the previous week's pivot point, which is good, right? It's risk on when we're above it. The range, it's worth pointing out, is really narrow. And while we're not necessarily in the middle, we're more in the upper 2/3, would be a good way to say it. The expectation is that we maintain inside this box, at least until the FOMC. It's not much of a morning briefing when everything comes back to we got to wait for the FOMC. We have an untouched point of control. $39.27. And we have another untouched point of control, $39.96. It really is worth trying to think about what's on the agenda after today that's going to carry us into September, which is going to be where the next FOMC is at. You really want to continue to focus on companies that can pass on those increased costs. We're looking at Apple getting back above the anchored VWAP. Just keep in mind with those swing highs and swing lows after we've come off of this bottom here, higher high, higher low, higher high, higher low. It's going to take a while for this linear regression line to turn around and begin going the other way. There's also the idea that for that to happen, or even just until it happens, a lot of the things that price can do would be to begin basing. Now, this extended run in Apple from back here, this was FOMC. It was the 16th announcement. And then the run up. This time, however, we're already near that upper end, especially with the earnings yesterday. I guess we kind of faded back some. I was thinking we were still around that 153.5. All right, so when we're already at the top of the range, the expectation is that we got to pull back off of that, right? And especially if we're going to continue with this linear regression. But with such a drastic change in market structure, you might want to start focusing on running a new one. Start it with your pivot low. And of course, you still leave the dominant one in place. All right, so we're in that new contract in gold. Going to need it to kind of calm down a little bit. Bitcoin hovering around that VWAP. It is up off of the lows, but we're still holding below 22. The bonds got really rowdy yesterday. They seem to be calming down a little bit now, but it was getting pretty extreme. We had an inside day bounce earlier this morning. See if it's going to come back down and retest that. We are underneath the 4-period daily moving average. So right now that's still providing significant resistance. Gap down open in the dollar last night. We're holding above that 4-period. The idea here is if the dollar turns bullish and continues to push back up, it's likely to put pressure on the S&P and the NASDAQ. The benchmark for the dollar is to get it back down below that 105. We were getting some pretty extreme moves last night in oil. Then again, things started to calm back down a little bit. And that's really the expectation, not just in one market, but across the board. I really expect this entire marketplace to just squeeze in on itself into compression and wait for that FOMC announcement. So we're looking for the VIX to get below $25 if we're going to sustain that strong bullish move in the S&P. We're looking for the dollar to continue that fade down. And that's what I got, guys. Be careful. Let the announcements do their thing. Don't try to play the first push. And it's my day to stream, so I'll be in the futures channel at 9:15.